Takes energy to create both of these. This energy is used up here, and the energy is held here and can be used an indefinite or amount of times because gold is indestructible. We know the true fundamental value of this because it's based on how much of this garbage governments issue and how much of this sound money exists in the entire world. We don't really know what the value of this is yet because it's going through its test. Maybe now, we'll see. But just keep that in mind, and I just wanted to start this with a little technical lesson to reinforce what we were talking about before I left for Florida and Panama. Remember that the blue line is the 50-day moving average. That bottom red line is that 200-day moving average. And remember when we talked about it, I said that the price was very stretched above. And so it can only go so far above or below before it's coming back to that 200-day moving average, okay? And what you're witnessing here is when it reached that peak and it was so extremely stretched, it just pulled back and stayed within a narrow range, giving that 200-day moving average a chance to catch up. Can you see that in this chart? And this is the spot silver chart, and you see that same kind of behavior. So remember that 200-day moving average kind of acts like a rudder on a boat. And if the spot price of anything, it doesn't matter whether it's spot gold or silver or the dollar or Bitcoin, which we're going to see in a second, or stocks or anything, when it gets overstretched, you want that $200-day moving average to continue to move up and just let some of that steam out of that price target. So that's what's happening with both spot gold and spot silver. Not an issue at all. Now, I thought that this was really interesting. This happened this morning. Bitcoin traders are still rattled after $340 billion wipeout.
Bitcoin's recent $340 billion wipeout illustrates how extreme deviations from long-term averages can snap back violently. After running far above its 200-day trend, the price reversed sharply, dropping below key support. Analysts argue that this loss of momentum reflects a cooling speculative cycle. Unlike gold or silver, which carry intrinsic energy-based value, Bitcoin is still navigating its identity test. It behaves more like a high-beta risk asset than a store of value. Still, its long-term trend remains intact, but its volatility highlights the difference between decades-proven monetary assets and digital experiments still fighting for durability.
And let's take a look at that chart, okay? This is all the same time frame. And again, you see that red line on the bottom as that 200-day moving average. And you can see how stretched it was. And you also see that 50-day moving average on the blue line. And you can see how the spot price went above and below that blue line for a while, and now it has dipped below that 200-day moving average. So some are saying that this is the reason why Bitcoin doesn't have the momentum to move up further, at least at the moment. So we can keep an eye on this, but the difference between the two or the three of them should be pretty clear, because really what we're looking at is spot gold and spot silver kind of sorta represent gold and silver. Not really, because neither one of them reflect the true fundamental value. And that's true for spot Bitcoin as well, the Bitcoin to the US dollar. The difference is takes energy to create both of these. This energy is used up here, and the energy is held here and can be used an indefinite or amount of times because gold is indestructible. We know the true fundamental value of this because it's based on how much of this garbage governments issue and how much of this sound money exists in the entire world. We don't really know what the value of this is yet because it's going through its test. Maybe now, we'll see. But just keep that in mind. And I just wanted to start this with a little technical lesson to reinforce what we were talking about before I left for Florida and Panama.
The broader economy is wobbling under mixed signals. The U.S. government shutdown, now the longest in modern history, has amplified uncertainty. Missed paychecks ripple through households, businesses, and lenders, creating delayed payments, rising defaults, and strained social services. Despite political negotiations, the economic damage accumulates daily, and reopening won't instantly undo the financial shock. Food insecurity is growing quietly in the background as government agencies halt key programs. This exposes how fragile everyday life becomes when political conflict disrupts essential services. The shutdown is more than a headline. It's a stress test exposing structural weaknesses across the entire economy.
I also thought that this was interesting, and I wanted to bring this up, that we have a cloudy economic outlook. Well, look, we already knew that the reportability was not great before all of those job cuts and the government shutdown, which is now in its 42nd day, the longest government shutdown in history. And let's just kind of look at where we're at with that, because the rift among Democrats puts Congress on a path to end the U.S. shutdown. They really didn't get anything that they were asking for. But you and I, well, we've had to deal with the government shutdown, and maybe it hasn't impacted you on a clear level, but there are those that it really has impacted. And I'm telling you, and I cannot reinforce this enough, food becomes the single biggest issue during these transitions. That's why I became an urban farmer. That wasn't really what I wanted to do, but knowing that food is a very big deal, and U.S. again seeks to halt food aid. These are things that have been going on while we're getting more tax breaks for the wealthy. IRS quietly retracts limits on loopholes. The Treasury Department and the IRS, through a series of new notices and proposed regulations, are giving breaks to giant private equity firms, crypto companies, foreign real estate investors, insurance providers, and a variety of multinational corporations.
While average Americans feel the pressure of instability, new IRS and Treasury guidelines have quietly expanded tax loopholes for private equity groups, multinational corporations, crypto firms, and foreign real estate investors. Provisions meant to limit corporate tax avoidance have instead been weakened, continuing a pattern seen in earlier multi-trillion-dollar tax cuts. These adjustments increase corporate advantages at the expense of public revenue. As government finances become strained, citizens shoulder the impact through reduced services and greater economic vulnerability. This widening divide reinforces why individuals must build their own financial resilience rather than rely on shifting political promises.
The provision, the corporate alternative minimum tax, was passed by Democrats, and it sought to stop corporations like Microsoft, Amazon, and Johnson & Johnson from being able to report big profits to shareholders, yet low tax liabilities to the federal government. These breaks come in addition to the roughly $4 trillion package of tax cuts that President Trump signed into law in July. Do you see why it is so critically important for you to be as independent, to become your own central bank, but do it inside of a community to provide surety in food, water, energy, security, barterability, which really my preference is silver, but in any form. And I want you to also realize that anything that you have that's physical is barterable, as well as your talents. So this could be a good time to learn some skills. Wealth preservation, which for me is primarily gold, But again, you need to maintain your standard of living, and community is going to come in to help you create that surety.
In a world where government instability and corporate favoritism shape the economy, personal independence becomes essential. Building resilience starts with the fundamentals: food security, water access, energy alternatives, and practical barterable skills. Silver remains a strong option for day-to-day barter, while gold excels at long-term wealth preservation. Physical assets matter because they exist outside the digital and political financial systems. Community amplifies this resilience. Shared skills, shared support, shared protection. As uncertainty rises, individuals who strengthen these pillars can maintain stability regardless of government decisions, market volatility, or economic turbulence.
Community, arguably the single most important thing that I talk about these days, and shelter. Get it done. All of this back and forth, the government shut down, okay, now maybe it's going to be open again tomorrow, but that's just to fund the government for a couple more months. And then in January, are we facing another shutdown? And what does that do to global confidence? And the globalists, global governments, global corporations really wanting to buy our debt. That right now, look at it. And this has been true for a while, but never so true as it's been over this past, not even a year yet, right? The foundation of the global monetary system, the 10-year treasury, is going like this. If you're going to build a house, do you want to build it on a fault line like this? Or do you want to have confidence that it's on bedrock? Sound money is bedrock. Sound money is money that the governments and the central bankers cannot inflate away. And gold, particularly redeemable gold in the system, requires fiscal responsibility. So you can't have all of these giveaways in the system, because not if you have redeemable gold in there, because if you and I saw that and we didn't like it, we'd simply pull the gold out of the system and create more restrictions. So you're not going to have a $10 trillion Zimbabwe note that you can't buy anything with.
The world is approaching another turning point in monetary history. With global confidence in the U.S. Treasury eroding and volatility increasing, a reset of some form is inevitable. Historically, only a small percentage of the population, around 3%, has driven major systemic change, including the American Revolution. If enough people demand sound money, gold-backed and redeemable systems could return. A reserve structure with even 40% gold redemption would restore fiscal discipline and prevent the unchecked creation of low-value currency. As the current system strains, public participation may determine whether the next era is built on stability or continued inflation.
And the dollar is that way too. So let's see what happens tomorrow. But even if the government shutdown ends tomorrow, can it really easily undo and turn back the clock? No. There's an awful lot of damage that's been done over these last 42 days. Even if these people get their back pay, I mean, it is a trickle-down effect. If people weren't getting paid and they couldn't pay their bills, that means you've got more defaults, more late payments. It's a problem that impacts everybody, whether you see it directly or you feel it indirectly. Fortunately, my daughters went to Florida and they're coming back today, and Phoenix is one of the airports that had to close down a lot of the flights. And fortunately, they already texted me. They're on a plane. They don't have any layovers, so they're going to make it home. But I was questioning whether or not that was going to happen. And that's all due to the government shutdown. Plus, they're understaffed anyway. 3% that caused the Revolutionary War. 97% of the population certainly didn't participate. I mean, they ended up participating in it, but they weren't what pushed it. And so if you think about it, we've got the 1% that are ruling the 99%. So 3% Revolutionary War, and that's 3 times as many people as that 1% that's dictating right now. And that's why I think that we've got the potential with 3% of the global population participating in this to have a voice in the next monetary system. And if I'm sitting at the table representing us or whoever is, I'm going to be pushing for redeemable gold in the system. I don't care what that percentage is. It doesn't have to be 1-to-1. I don't really care. But I want at least a 40% redeemable gold in the system. And when I say redeemable, that means if you don't like what they're doing, you can go in and say, give me the gold out of these dollars or wherever you happen to be in the world. That would do it.